Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon, and today we're going to have a market brief discussion, talk about current market condition and trade of the day. Before we begin, please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to trade in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own portfolio based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. You can see the relationship between TradeSpoon and Trading Block on the bottom of your screen. So let's take a look. First, let's look at our 10-day model. This is predictions for the next 10 days. You can see short-term 10 days. Looking at the spiders, we see strong momentum to the upside. We had probably one of the worst May since 1960, and now we have a very strong rebound, almost at the 52-week high. So the model predicts that we are breaking 290 level, and overhead resistance is 292.83 for today. 288 is support. Currently trading right around this magical number. 290 is an overhead resistance with a positive trend for the next 10 days. Looking now further out into the next 50 days, we're seeing actually the opposite picture. Now, this is the model that's optimized for 50 days. We actually see a strong signal that market is overbought at 291 level, and then there is overhead resistance around 291, 292 level, which we actually see. So this is a seasonal chart. It's based on the TradeSpoon Bulls and Bears model that runs on Sunday at 6 p.m. So for now, the way I'm structuring my trades, since I don't know whether the 290, 291 support overhead resistance will be broken, I'm waiting. So if we close today above 290 and tomorrow above 291, then I would say that the overhead resistance is broken, and we are probably going to retest the 52-week high at 295, 296 level. But nonetheless, the model does show that one should be cautious that potentially 296, 300 level on spiders is an overhead resistance, but we do see more negative momentum in the next 50 days. Looking at the chart, again, we're above 50-day moving average at 286. We touched 290 briefly. We're staying at, we actually were as high as 291.25. We're trading right around 290 level. As long as the market is above 50-day moving average, bulls are winning. So as long as the market is staying to above 286, 287, I would be long, but the better entry point would be 286 as opposed to 290, again, until the this overhead resistance gets cleared. What drives the market? Negotiations between China and United States, United States and Mexico. So that on the mind of everybody. We are approaching the next earnings season, so that's in the middle of July. We're still quite away from that, and also G20 meeting, where potentially the next step in terms of some of the further clarity about China and US negotiations. How do you trade in the current market? Again, we have monthly model based on the same model that we've shown for spiders. Monthly Trader is a service where we pick 3 bullish, 3 bearish ideas every week. On June 3rd, we publish MasterCard to be a bull signal. You can see with the market rally, MasterCard outperformed the market. This is what the model, what you want the model to do is to make sure it's outperforming the model. The stock is up close to 10% up from the lows, from the time the signal was published. So we're trading these signals in the live trading room. If you look at the performance of our live trading room, you can actually see we're averaging about 75% accuracy. So 3 out of 4 trades are successful. You can see all of the winning and losing trades in our performance. We're logged them. You can see this is also was a monthly trader model. When the market sold off, I was able to buy this Broadcom, the semiconductors, at $3.80. Currently trades at 14. I sold it at $7. And you can see we're actually continuing with the semiconductors. Even though semiconductors officially entered bear territory, they were oversold, and I think short term it is still a strong buy signal. We're trading Broadcom, AMAT, and now we do have a signal Intel. I traded Intel today for day trading, buying at the close to the support at 46.05. So currently, as of right now, I do not have a position in Intel. I do have a position in Broadcom and AMAT. Finally, we do have active investor workshop every other Tuesday at 3:30 Central. One is today. If you see this event and before 3:30, please register for today's event. You can find the recordings also, or register for 2 weeks from now for the next event. Again, that link is tradespoon.com/workshops. And as always, please follow us on social media for all the latest market commentary and news. Thank you very much and have a great day.